What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw another bullish day in the stock market with the S&P 500 closing at a brand new all-time high. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY closing at another brand new all-time high on closing prices, and we did see SPY going up 0.26%. So again, this is still a very impulsive rally, which does tell us that we need to stay bullish because the price action is screaming bullish right now. We can see that we did close above the previous all-time high up here, and our next resistance level is right around 454.4. Above that, we could start to break out, and we'll very likely start to see more of a blow off top look because we still have not seen a pullback. You can look at this gap and go, gap and go, gap and go, gap and go look that SPY is currently in, and it just tells you how impulsive this rally has been. The bulls have taken the elevator up and there's absolutely no chill for the buyers. Now we do have 4 gaps below, and the one gap at 436 I do not expect to see filled until we see another stock market correction. However, these other gaps are free game, and we do have gaps right around 450.8, 447.7, 442.7, and then the gap at 436. And remember, the gap at 436 I don't expect to see filled until we go through a correction. Now once we get up to this level right around 454, or possibly even right now, we should start to see the market cool down a little bit. Just like any price action, nothing goes up in a straight line forever and nothing goes down in a straight line forever. So eventually we do expect to see some sort of counter trend move, and it could be extremely shallow and it could only take us to about 448, but I still do expect to see this sort of pullback counter trend move in the very near future. So that means we would definitely fill the gap right around 450 and more than likely fill the gap right around 447. So that is the highest probability chance I give the market right now, is a pullback back to about 448 to 447. Of course, it's possible when we start pulling back, if we break down through that support, we could go down to the next support lower right around 444. And below 444, look for the gap fill right around 442.7. Now, if we go below that, we do have very strong support at 441, although I don't really expect to see SPY breaking back down below 444, and I don't necessarily even expect to see SPY getting back down to 444. So the highest probability chance is a pullback to about 448, so watch that level very closely. Now, if we start to get the blow off top, you definitely don't want to chase it, because typically when you get a blow off top, you're going to see very sharp selling that follows. And if you're chasing that rally, you're just going to end up being a sucker who's going to be bag holding, and you literally will feel like you bought at the top because technically you did. So don't chase this rally. If you missed it, you missed it. And that's why I was giving plenty of bullish signs that it was time to buy in this market before this rally occurred. If you miss a rally, you're much better off just being patient and not missing the next opportunity and keeping a clear headspace. If you start FOMOing in now and you get caught in this bag holding situation, you're only going to kick yourself twice for missing the rally and then buying in at the absolute top. So don't chase, just be patient. Next up is the NASDAQ 100 QQQs, which again had a very bullish day, going up 0.61% today and getting very close to that next resistance level at 378. A lot of what I told you on the S&P 500 is going to apply the same exact principles here on the QQQs. So I'm not going to repeat everything I just said. So you're looking for resistance at 378, 381.5, and above that, we're very likely breaking out and starting to run to that price target at 388. To the downside, look for support at 373, 369.7, and our strong support level at the 50 EMA right around 367. Again, just like with SPY, I don't expect us to get down to 367, but if we do, that should be a very strong support level that should hold up. And I don't expect the gap at 360 to get filled until we go through another correction. So the price action is screaming bullish, and we're developing more and more bullish trending each and every day. So this is definitely still a very strong bull market. Jumping over to the Dow Jones, we were flat on the day, basically going absolutely nowhere, and we did hold up above that support level at 355. The next resistance is still the previous all-time high at 356.5. And above that, we should see the Dow Jones breaking out and starting to run to 360. So look for support to the downside at 355, 351, and the gap fill at 349. And the strongest support level is the 50 EMA at 348, which again, I don't necessarily think we're going there, but if we do, that would be a great buying opportunity and a great risk level. On the Russell 2000, we were up 0.26% today, and again, we see the Russell 2000 still looking like it's breaking out. We have the third day in a row closing above our resistance trendline breakout, and we did get rejected at that resistance level at 229. So on a price action close above 229, this caged dog will start to break out and we could see it starting to run. But remember, even though the Russell 2000 is a caged dog, it's still a chihuahua and it's not a pit bull just yet. So we really need to get that very strong breakout above 229 and 232 to really get a very strong impulsive rally. So watch those two resistance levels as the strong breakout levels, because as you can tell, 229 is still giving the price action a lot of trouble, and the IWM ETF can still not close above that level. So on a break above 229, I'm getting extremely bullish on the small caps, and you can see that we do have the full bull trend. Strong support to the downside is at 226.5, the breakout level at 225, and the gap fill strong support area is right around 223. Below 223, we're very likely breaking down, and this was all just a false breakout look. On the ARKK ETF, we were up 0.81% today, and we still see ARKK with bullish price action with the fourth day in a row above the 50 EMA, and we're definitely starting to see some positive slopes in our moving averages. However, the price action is still getting rejected at that 120 resistance level, so that is giving ARKK a lot of trouble, so watch that level closely. If we can break and close above 120, that will be bullish price action, but we still do have strong resistance around 123 and 126, and above that you have resistance at 128. Strong support in what I would say is your risk level in ARKK is right around 116, which is our 50 EMA, and below that you also have support levels at 115 and 113. Below 113 we're likely breaking back down and going much lower, so that will be the most critical support level. On the VIX, we were down over 3.2% today, and we still see the VIX getting crushed, which goes hand in hand with a bull market. As the VIX heads back down towards 14, we're more than likely just going to see more and more bullishness in the market, so look for that price action. Now I will say the VIX looks like a dead cat, so I wouldn't be surprised to see a short spurt of volatility in the very near future, so look for a potential bounce in the VIX that could take us back up to about 16.9 to 17, and that could be a dip in the market and it could be a buying opportunity. If the VIX starts breaking out back above 18.2 or breaking out above 20, that's a lot more concerning, and we could still be going into a deeper stock market correction. But again, that's not what the VIX is doing. Right now, the VIX is telling us that we're going back into a bull cycle. So watch those VIX levels closely, and right now the VIX is still heading down towards 14, and it is looking very bullish for the rest of the stock market. On Bitcoin, we're currently down over 4.7% after we did run into that price target at 67,000 and get rejected. So like I always tell you, all of my price targets could lead to a pullback, and we're now seeing Bitcoin getting rejected at 67,000 and breaking back down below the 5 EMA. That doesn't mean Bitcoin is done and it's rolling over and it's going through a correction. It just means it needs to cool down. Had a very monster bull rally off of that strong support at 40,000, and now it's just cooling down and pulling back and giving you a buying opportunity if you missed the rally. Look for support levels at 59,000, 56,000, and 53,000, and below that we still do have strong support around 51,000. Too much lower than 51,000, it will start looking a little more concerning, and we could see Bitcoin going through a deeper correction. So ideally, we'll see Bitcoin staying above 53,000 and keeping the full bull trend as we attempt to break out of 67,000 and get to the next price target at 75,000. Don't get too sold on 75,000 as long as Bitcoin is getting rejected at 67,000. Don't look too far ahead, and even though Bitcoin is bullish, you still have to remain realistic expectations, and if the price action can't break above a level, you need to respect that level. On Amazon stock, we were up just over 0.5% today, and we still see Amazon stock failing to break out above that resistance level at 34.52. Price action still above all the moving averages, so no concern there, and we're definitely starting to see some bullish momentum building up with the positive slopes in the moving averages. If Amazon can break out above this resistance, we'll still have resistance at 3,500, 35.52, and the full gap closes at 35.80. To the downside, look for support right around 3,400, 33.72, and below that we still have support at the 20 simple moving average at 33.27. On Tesla stock, we were up 3.26% today on increasing volume after Tesla did report earnings. So apparently buyers loved the earnings report and they were out buying up Tesla like crazy today because you can see how huge the volume is. So this is a very bullish candle on increasing volume, but we do see Tesla attempting to break out of the previous all-time high level right around $900. So this should be a very strong resistance level, and Tesla still does have that gap below right around 842, so we could see a pullback before we see an all-time high. Remember what I told you about Tesla, that it's getting parabolic and it just looks like it's going way too far, way too fast, so don't get overly bullish. Even though it does look like Tesla is still very bullish at this time, you really shouldn't chase a move like this. So if you own Tesla, you have no trouble to continue to hold it. However, if you don't have any Tesla, I definitely don't think you should be buying at these levels. On a break above 900, we should see this blow off top continue to play out as Tesla starts running to a brand new all-time high. But again, I still think a sharp decline is going to follow any more parabolic price action. So to the downside, look for support right around 881, 858, and the gap close right around 842. And below that gap close, we have support at 825, the other gap close at 820, and the 20 simple moving average at 809. The strongest support level is still 800. And as long as Tesla is above 800, I think it's a buy the dip opportunity because it is still likely in a very strong bull cycle and it very likely will eventually break out to a brand new all-time high. However, I suggest buying the pullback and not chasing this parabolic rally. On Apple stock, we were up 0.15% today and we still see Apple getting rejected around that resistance at 150. However, the price action is still above all the moving averages and we're still developing a lot of bullish momentum and all of the moving averages are now positively sloping. So if Apple can break out above 150, it could start to run and attempt to break out above that previous all-time high of resistance around 157. To the downside, look for support at 147 and 145, and below 145, you still have support right around 144 and 142. Below 142, we're very likely going down lower, and we very likely will break down below 139 and close the gap at 137. That's not the scenario I think is likely to occur, so watch that strong support level right around 145 because that's likely the only pullback we're going to get on Apple, especially going into earnings, and there will be a lot of optimism around Apple's earnings. On the financial sector, we were down 0.42% today, but we still see very bullish price action with a very strong bull trend. The industrial sector was up 0.2% today, and we still see bullish price action and a lot of bullish momentum building up in the moving averages. The healthcare sector was up 0.41% today, and that's the second day in a row closing back above the 50 EMA, and we're starting to see the negative slope in the 20 simple moving average starting to flatten out. This is a bullish development for the healthcare sector. The energy sector was down 1.85% today and finally closed back below the 5 EMA, so we could see the energy sector starting to lose some of that momentum. We still have a very strong bull trend, so it's way too soon to say it's coming down lower, but this is a very early warning sign that it could be starting to weaken. So jumping back over to the S&P 500, you can definitely see how strong this bull rally has been, but I can't caution you enough to not chase a rally like this. If you missed it, you missed it, and just move on and be patient and wait for the next buying opportunity. Even if we continue to go higher from here, it makes absolutely no sense to chase a move that you missed. So stay disciplined and stay patient, and if you're getting FOMO, just walk away from trading for a couple of weeks and you'll thank me later. Don't forget it is earnings season, so there's going to be plenty of volatility and there's going to be plenty of buying opportunities because that volatility will bring in some surprises across the market. Just be patient and don't FOMO into a rally that you missed. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs. And I think with this current market condition, now is the best time to be a BANC member. And I am currently running a 50% off promotion code for your first month. So now could be the best time to try BANC Trade Alerts. If you're looking for more information or how to join BANC Trade Alerts, you can find all of the details and the links in the description below. I also have the Stocks channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.